The LBMA's gold and silver price manipulation is about to come to an end. So I saw this tweet yesterday from Willem Middelkoop. Russia proposes a new international standard for trading in precious metals, the Moscow World Standard, which will become an alternative to the London Bullion Market Association, which systematically manipulates precious metals markets to depress prices. So let's have a look at this article from ZeroHedge. All right, so Russia proposes new standard to compete with the rigged LBMA. According to Russia's finance ministry, this new independent international structure is necessary for normalizing the functioning of the precious metal sector, and its creation is critically important. The basis of this new structure will be a new specialized international precious metals brokerage headquartered in Moscow, which will rely on the MWS, which is the Moscow World Standard. Also proposed is a committee for fixing precious metals prices composed of central banks and largest banks of countries that are members of the Eurasian Economic Union, which you can see there, that currently have a presence on the precious metals market. According to the Russian Finance Ministry, precious metals prices will be fixed either in the national currencies of key member countries or using new monetary units used in international trade. For instance, the new BRICS currency proposed by Putin. The Finance Ministry wants to make membership of this organization attractive to all market participants, especially China, India, Venezuela, Peru, and other South American countries, as well as Africa. It aims to swiftly destroy the monopoly of the LBMA and to provide for stable development of the precious metal sector. I think we all agree that that would probably be a good thing. In essence, Russia proposes to create a market for gold, platinum, etc., which will be regulated by countries that control the resources for these metals. Now, a lot of people have been crying out for silver miners. Why are silver miners still selling at these prices? Well, very soon, maybe countries that have these resources will start to control these prices. This would be, simply put, a revolution. On the basis of this new market, it intends to further the system of bilateral trade in national currencies that specifically excludes dollars, euros, and pounds. And now, some statistics on the world gold supply. The production share of the US and other hostile nations produce a grand total of 22% of the world's gold. Eurasian Economic Union, BRICS, and Africa together produce 57%, already a controlling share. Now add Peru and Venezuela, and the number goes up to 62%. To put it in the plainest terms possible, Russia is colluding with a number of other countries to exclude the dollar, the euro, and the pound from the system of international settlements, starting with precious metals, but not necessarily stopping there. These countries control a lion's share of gold production. For starters, Russia has fixed the price of gold in rubles. We've done videos on this before. This compares rather favorably to the current LBMA fixed price of gold, which you guys know, and silver as well. A lot of gold, and especially silver investors, have been pretty upset in the last year or so. The days of LBMA's ability to drive down gold prices using paper gold manipulation appear to be running out. And I wonder whether silver will be part of this as well. I would say so. So what now? Capital controls, that's what. Smart money will flee to this. How long do we have? I don't know. Well, what's that old saying from Willie Woggledagger? William Shakespeare. Better 3 hours too soon than a minute too late. And I agree. Despite having a mullet, Willie has a very good point. The proposed currency system is going to be backed by commodities, and the BRICS cannot be a system that is under the control of the LME. Remember when we wrote about the fiasco of the cancellation of $4 billion of nickel trades, how the LME did so to bail out the CCP? Good old Cliffy was livid. But you know what? Even though he's a titan in the industry, he couldn't swing any changes. Now, if Cliff couldn't swing changes and he's a billionaire, what hope do we have? Anyway, the point is that when the LME did that, they destroyed their credibility and trust. The only question in my mind was, at that time, what replaces it and where? Well, I think we now have the answer. Remember the UN NATO Western crowd championing, you will own nothing and be happy? If you can't own precious metals, then what is the point of backing a currency with them? The answer is none. Which allows me to conclude that the BRICS are not going to sanction the ownership of precious metals. The West? Well, I can certainly see the teleprompter telling Sleepy Joe that by owning precious metals, you're funding Putin's war or some hogwash like that. Like I said, I've put more thought into this particular topic and you'll be able to read all about it when it hits your inbox soon. Cheers. Chris McIntosh, Capitalist Exploits, and Glenorchy Capital Macro Fund Manager, who I've talked a lot about on this channel, and I recommend that you guys subscribe to his blog. And speaking of Chris McIntosh, I did this video late in 2021 where I shared how I had learnt from Chris, especially with the coal industry, and we invested in Peabody, and we had a 10x return on this. In fact, we turned over $200,000 into over $2 million profit. So, and if you guys want to know more about how I do all this sort of thing, in my last video, Peter Lynch's Top 9 Investment Lessons, I actually gave you guys a sneak peek to Finance Uncut Insiders, which is my portfolio, how I invest, my investing approach, all my research and analysis on my portfolio, how I trade, both buying options but also selling options for passive income. And so if you're interested in Finance Uncut Insiders, what I'll do now is I'll just cut to a clip from this last video, which gives you guys a sneak peek into Finance Uncut Insiders. Now, some of you may remember I did this video last month, Investing Lessons from Buffett, where I talked about my approach to investing and my portfolio structure. And in the video, I discussed how we use Austrian economics as our foundation, but then we break our portfolio into 4 parts: value stocks, growth stocks, option selling stocks, this is for income generator, and small cap stocks. And then we have our physical bullion, our options trading account. So this is where we buy and trade spreads. So we buy leaps and buy puts and bear call spreads, etc. Our real estate holdings, both residential, commercial, and our cash position. So what I want to do is basically in this video, this is when I first announced Finance Uncut Insiders, which is a weekly newsletter subscription where I share my investment approach, my investment portfolio, all the research and analysis that I do, and why we're in particular sectors. So you'll get all my trades, both the options trades, but also when we're buying a particular stock, why we're buying it, and also when we sell a particular stock. So what I want to do now is just give you guys a little glimpse or a sneak peek into what that newsletter will look like. All right, so here we go. Finance Uncut Insiders. Here's the report. This is what it's going to look like. We go through our Austrian economic approach and why it's so important and why we recommend you guys learn more about it. How we use a combination of Buffett and Greenblatt's fundamental value analysis, and why it works and why it's so good, and how we learnt from these gentlemen how to apply options to our portfolio. Then, as I just mentioned, we break our investment portfolio into 4 parts. And then coming to that now, I'm actually going to share with you guys some stocks that we own. So I'm going to give you a couple of free stocks. So if you don't subscribe to this newsletter service, well, I'm going to give you 2 stocks that we own. So the first one is Stanmore. So Stanmore is a coal stock. It's hard to go past Stanmore, who are acquiring Mitsu's 20% of the South Walker Creek and Poitrel coking coal mine in the Bowen Basin in Queensland, as well as other potential development projects subject to FIRB approval. That's Foreign Investment Review Board. Settlement is $380 million US, subject to adjustments. Stanmore recently purchased 80% of BHP's Mutsi, so they're taking it completely over, and have gained a further 10.5 million tonnes of coal production per annum from existing projects. If we go down a little bit more, so their saleable coal production, 2.8 million tonnes in the first half of 2022. That's up from 1.26 million tonnes in the second half of last year. So they've already doubled that in under a year. Higher realised prices and significant uplift in volumes following the SMC acquisition during the first half of 2022. Seen a record revenue and underlying EBITDA delivered in just the first half 2022 of 726 million. Operational performance led to operating cash flow of 563 million for the first half of 2022. Cash flow significantly improved liquidity, 546 million of cash as at June 30, 2022. So that gives basic earnings per share of 32.37 cents per share. Our buy price was 49 cents in August 2020. That equates to 1.5 times earnings, and we're expecting some pretty big dividend payouts based on our buy price. Now, you can see currently when I added this chart to the newsletter, which was the other day, its shares were trading at $2.21. We currently have that as a hold. We aren't accumulating this stock. Now, we still think this stock has more upside based on a number of factors, based on their current earnings performance. So yeah, but we will, before we start trimming our position on this and taking profits, we want to enjoy some of the big dividends coming our way. So the next stock that I'm going to share with you guys is one that I have recently been talking about. It's a drilling company. DDH1, DDH is the ticker code. It announced an on-market share buyback program on the 1st of July. The proposed number of shares to be acquired over a 12-month period is just over 34 million shares, or 8% of its current capital. Added 15 quality rigs to end of the year with 183 rigs. A further 11 are on order or under build, making it a top 5 largest drill companies globally, or in terms of fleet, the number of rigs. Annualized revenue per rig of 2.9 million. That is up 6.9%, and their outlook is for increased margin per rig, which is fantastic in an inflationary environment. 14% increase in full year 2022 financial year pro forma revenue to 506 million compared to 444 million, above average industry return on invested capital of 27%. Now that is huge, guys. Our rule of thumb is anything above 10% is good, and that's on our radar to look at. So 27%, outstanding. 10% increase in underlying EBITDA. Let me just scroll up a little bit. Underlying, where are we? Underlying EBITDA, 113.6 million compared to 103 million, 22.4% margin. 17.7 million returned to shareholders in dividends, with a dividend policy moving forward of 30 to 50% of operating net profit after tax and amortization, which currently, based on the 17.7 million, is 5.37 cents per share. Basic earnings per share, which is based on EBITDA, is 34.47. Our buy price was just in the last several weeks, so we started buying in July and August, was 64 cents, which equates to 1.86 times EBITDA, with an 8.39% dividend yield and growing. Now, when they made that announcement, the share price, you can see, absolutely shot up. So from 64 cents to 85 cents, and we still have this as a buy. So we are still buying this company even at 85 cents. And yeah, I actually wouldn't mind a pullback because this company is dirt cheap in my opinion. Once again, not financial advice. You guys, go, if you want, go do your own research, run it past your own financial planner, financial advisor, etc., etc. But there's a couple of stocks there. So this is the kind of thing that I'll have in this newsletter, is all of our stocks, all the reports, all the analysis, why we buy a stock, why we sell a stock, and when we're going to sell, as well as all of our options trades. So how we sell options for passive income like Buffett and Greenblatt do, for compound. So we do own some big stocks, even though our focus is on small cap. We do own large stocks that we simply sell covered calls. We receive about 2% a month, so about 24% a year on average. And, you know, they usually pay a 5-6% dividend yield as well. So we're getting about 30% a year just in income. And what do? We just reinvest it. We don't use that income to live off. We just reinvest it. So compounding it at such a high rate. So, you know, they're boring the big stocks, but that's why we use it, is simply for the options trade there. So as we continue going down, building an international portfolio, so we talk about the different markets and sectors that we're in and interested in. You know, outlook, some of our stocks that we've owned and why we've bought particular sectors, why we like small value and resource stocks over other sectors. Yeah, you guys will love this one. Why we buy junior explorers in two particular market cap quartiles, and that it really says it right there. And then the life cycle of a junior explorer, and yeah, why we invest in particular parts. There's times to invest and there's times not to be investing in this sector. And then once again, guys, important disclaimers, not financial advice. We do not accept any liability. This is not a recommendation to buy or to do anything. It's just for entertainment and education purposes only. So there you go. That's the newsletter. I still have to add the rest of our portfolio in there and all the analysis, but this gives you an example of what it is going to look like. So it's going to be a weekly newsletter. For those of you who are interested, now it's not free. It's not free. It is going to cost $1 a day. So if you can afford $1 a day, that's $365 US per annum. This gives you an annual subscription, a weekly newsletter for an annual subscription. But at the moment, we are going to give, as we launch it, we're going to give 30% off. So it's going to be $255.50 for those of you that do sign up now. If you are interested in it, send me an email. Here's the email address on the screen now. So send me an email. I'll put the email address also in the description of the video, not in the comments. If anyone tries to message you guys that's pretending to be me in the comments, ignore it. I will not tell you to go to some silly app, WhatsApp or whatever. Just check the description of the video. This email address will be down there, and it's the same one as on the screen. So if you're interested in getting this newsletter, send me an email. Let me know what country you're in, and I will give you some payment options, and we'll have this fully decked out with all of our portfolio by next week, and you guys will start to enjoy everything that we do. You'll see everything. So our wins, our losses, you'll see everything. So anyway, guys, if you like this video, please do us a favor and hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.